We are doing 9706 paper 22 of October, November 2023. Okay. And this is your question number 1. Are you
Yes.
with me?
Yes.
Okay. If I'm scrolling through the question, what I can see is that this question requires you to prepare statement of profit and loss.
Yes.
And apart from this, what it requires to prepare is your statement of changes in equity.
Yes.
Okay. Then there is a theory. When I'm reading the theory, I can see this: give 2 examples of revenue reserves of a limited company.
Mm.
Do you know the examples of revenue reserves of limited company?
No.
There are 2 types of reserves, right? In limited company.
Yeah.
What are the 2
Capital
types of
res
reserves?
capital reserve and revenue reserve.
What is capital reserves?
Capital reserves are those type of reserves that which has like no
It
revenue. Is that?
the normal activity. They are abnormal activities. Like
Oh
you're
yeah, yeah.
starting
Normal
with
access.
revaluation reserves.
Yes.
So these happen sometimes. So this is your
Yes.
capital reserves. What
Yes.
is your revenue reserves?
The revenue reserves is like so revenue reserves would be for like it's gonna be an opposite for capital reserve, like normal money is like normal
From the
workings.
day-to-day business activities, the money that you earn. So what are the 2 types of revenue reserves?
So the two types of it's gonna be general reserve
Yes.
and retained
Retained
earnings.
earnings.
Yes.
Forgotten the theory of limited company. So today again you will start with limited companies because limited companies is very, very, very important.
Yes.
You see, if the question number 1 is of limited companies, it is a full-fledged question, so that they have one full income statement that they want you to make, and they have one statement of changes in equity that they want you to make.
Yes.
Are you with me? Statement of
Yes,
changes
miss.
in equity will be an independent question from the income statement.
Okay.
Just remember one thing: from the income statement, you will only need your profit for the year that would come in your statement of changes in equity.
Yes.
So we will do the statement of changes in equity of this sum.
Oh, okay.
So before I go to this, can you again tell me 2 examples of revenue reserves of a limited company?
The two examples of revenue reserves are general reserves and retained earnings
So it is general reserves
and retained
and
earnings.
retained earnings.
Yes.
So this is done.
Yes.
Yes,
Yes.
we go ahead. You have statement of changes in equity. The balance on 1st August is already given to you.
Yes.
Is it given to you?
Yes.
Oh. Now there is bonus issue. Can you tell me what is bonus issue?
Bonus issue is the amount that the company gives to its existing shareholders with a price.
Amount they give.
Shares.
Additional shares are given to your existing shareholders. How?
How, like, as in
Do they take any
how they
money
give?
for this issue?
For bonus issue? No.
No, they don't take any money. They give this
Yeah.
free of cost.
Free of cost.
If they are giving this free of cost, that means that money is not coming in, right?
Yeah, the money is not coming in.
If money is not coming in, then from where will they give this bonus issue?
F from retained earnings?
From securities premium first. If you see this line, reserves are maintained in the most flexible form.
Yeah.
So they have to give the bonus issue. So the first place from where they will give is if reserves are maintained in the most flexible form. That means you will
Yeah.
use capital reserves first,
Okay.
and you will use revenue reserves later on.
Yes.
Hmm?
Yes.
Yes?
Yes.
Fine. Now see what is the bonus issue. Read.
Okay. A bonus issue of shares was made one ordinary share for every 6 shares held.
So it is one ordinary share for every.
6 shares held.
So what is the number of shares that is there with you?
120,000.
Divided by the face value.
Yes. So 120,000 divided by 0.50.
How many shares is held with you?
240,000.
240,000 shares is held with you. So
Yes.
you're giving bonus. So number of shares held with you is 240,000.
Yeah.
So what is your bonus shares?
So it's gonna be 40,000.
240,000 divided by 6.
Yeah, 40,000.
40,000. Okay. Because of this bonus shares, share capital will increase, right?
Share capital, yes.
By how much?
It's gonna increase by 40,000.
40,000 is the number of bonus shares, right?
Yes.
So it will increase by number of shares multiplied by face value.
Okay. Multiply by face value. Do 0.50. 20,000.
Share capital will increase by 20,000. And
Yes.
what will? So share capital is increasing, so this is credit.
Okay, yeah.
What is debit?
Debit is going to be the
Is any money coming in?
no, there's no money coming in.
That means you're going to use your reserves.
Yeah, so
And you have to maintain reserves in the most flexible form.
flexible form, which means revenue reserves will come first.
No, if you have to use reserves in the most flexible form, so capital
Hmm.
reserves will be used first, revenue
Okay, yeah.
reserves later.
Yes.
So these are the reserves that you have.
Yes.
Tell me.
So which means capital, wait, so share capital is already credited, so capital reserve will be debited.
So which one? First, I will share premium, I will reduce, right?
Yeah, share premium would be reduced.
By 19,000.
Yes.
But I'm giving shares of 20,000.
Yes.
So retained earnings would reduce by 1,000.
Yes.
Are you with me?
Yes.
Let's go and fill the bonus issue.
Okay.
So I have bonus issue.
Yeah, so share capital is 20,000. Then share premium will, I believe, come down as 19,000. And then 1,000 in retained earnings.
Nothing in the total.
Nothing in the total. Yes.
Are you with me?
Yes.
Now we go to the next one.
Okay.
The second one. Come on, read.
Okay, so on 1st January 2023, a final dividend of 0.0 per share was paid on all shares in issue at
So
1st August 2022.
40,000 shares is your normal shares.
Yeah,
How many shares you gave bonus?
you gave the bonus shares as
40,000, right?
was, yeah, 40,000.
So what is the total number of shares in issue?
280,000.
Total number of shares in issue is 280,000.
Yes.
Final dividend is how much?
Final dividend is 0.07 per share.
So you will give final dividend on how many shares?
Per every share, yeah?
On all shares
Yeah, on all shares.
that were in issue till 1st August.
Yes.
Bonus is issued when?
Bonus issue on 1st September
So shares that is in issue till 1st August is how much?
is 0.07. So it's gonna be 240,000 into 0.07, yeah?
Yeah.
Hmm.
So this will become how much?
So which will become 16,800.
From where will you give dividend?
From dividend is paid and will you take it out from general reserves?
You paid from retained earnings.
Oh yeah, sorry, retained earnings, yeah.
Back again to all your concepts of limited company.
Yeah.
So from retained earnings you're going to pay. What will you do? What is the journal entry for giving dividend? Money is going out, so bank credit
Yeah.
and retained earnings debit.
Debit.
So you will pay dividend from retained earnings.
Yeah.
So which dividend is this?
Final dividend
From where you're going to pay?
from retained earnings.
1600 will go from retained earnings and 1600 will go from total.
Yes.
Correct?
Yes.
Now you have the next part. I want you to try the next part yourself and then I will again resume the recording.
Okay.
So
Okay.
right issue is made right issue.
Yeah.
Okay? Right issue is made one ordinary share for every 4 held.
Yes.
So I want to know how much is held. You see the total
Yeah.
over here, this is 140
Yes.
divided by the face value.
Okay. So 140,000 divided by 0.50. 280,000.
So this is 280,000.
Yeah.
So what are the shares that is held with you?
So 1/4 share, 1/4 shares.
80,000.
Yeah.
So you will get number of shares that you're going to give as right issue.
70,000.
280,000 divided by 4. Number of shares as right issue will be how much? 280,000 divided by 4. So it's
Yeah.
coming how much?
70,000.
70,000 shares as right issue. Just a minute, okay? So 70,000 you're going to give as right issue. Now what is right issue?
Now, right issue.
Are the shares that you give your existing
Shareholders.
shareholders at a premium.
Okay, at a premium. Yeah.
So whatever is the face value will go in the capital.
Yes.
And whatever is the extra value that you're going to charge will go in the premium.
Yes.
Okay? What is the face value?
So our face value,
Shares into, yeah, tell me.
face value is 0.50
And what is the
and our
premium value?
0.15.
So 70,000 into 0.50 is how much?
35,000.
And 70,000 into 0.15 is how much?
90,000 to 0.15. 10,500.
So come on, tell me how much will go in the share capital?
So in the share capital, it's gonna be the face value, right?
Yeah. How much?
It was 35,000.
And the premium was how much? 10,000.
10,500.
So what is the total?
So 35,000 plus 10,000. 45,500.
Okay, fine. Now, after this, they want you to prepare the statement of changes in equity. There is one more
Yeah.
thing that will come in statement of changes in equity is what?
Profit for the year.
Profit for the year, that you will get it from the income statement, and then you will have your balance at 31
31st
July
July.
2023.
Yes.
Okay. So
Yeah.
now do the working for the right issue first, then we'll go and make the income statement. So if I tell you that the profit for the year is 4260, please remember this profit for the year is going to come from where?
The income statement.
The income statement. So profit for the year is added to the retained earnings and it is added to the total. And
Total.
then you will find your total on the last date. So this is
Last balances.
75,
Yes.
10,500. This is 40,
Yes.
0.
46,020 and 23,1520.
Can you tell me what is shareholders funds over here?
Shareholders' funds. Yeah, so the total is basically the shareholders' funds.
Yeah, the total is basically the shareholders funds. Very good. Now we are supposed to do what? The income
The
statement.
income
I
statement.
gave you the profit for the year.
Hmm.
Okay. When I'm going to the income statement, you know, right? The income statement has to be made in a particular format.
Yes.
What is the format? Can you tell me and write along with me?
Yes. So first one is revenue.
Hmm?
Revenue minus cost of sales.
You will not write minus because
Yeah.
that is in accordance with IAS 1. Now, if you see, you
Yes.
have been given place for working of cost of sales.
Yes.
So here you will write working 1.
Okay.
Then,
And then gross profit.
hmm,
Then you will write administrative expenses. And from administrative expenses, it's gonna be,
okay,
yeah,
and this
working
side
two.
is working 3.
Yeah,
They've given.
yeah. So from administrative expenses, you'll do distribution costs.
Hmm.
And then from distribution cost, you'll miss up from that, you'll get like some sort of profit, right?
Hmm.
Profit before tax. No,
So this
profit
is
from
the
operations. Yeah.
then you will deduct the finance costs.
Yeah. Then you'll do a finance cost. Then you get profit before tax.
Hmm.
Then you'll minus tax. Then you'll get the profit for the year.
Okay. So this is the format that you have to stick into. There were 3 things that they wanted workings for. So we have
Yes.
written working 1, working 2, working 3.
Yes.
Are you with me?
Yes.
Now we'll read
Okay.
the question. For example,
So P Limited, yeah, P Limited sells electronic goods online. The directors provide the following information of 8% debenture, inventory, other payables, other receivables.
stop. 8%
Okay.
debentures. Can you
Yeah.
read for 8% debentures what it is? What is 8% debentures? This is the
It
last year,
loan.
this is the current year.
Yes. So opening and closing, basically.
This is the loan.
Yeah, loan
Where does the debenture loan come?
from the bank. Yeah.
So, what is it? It is a current liability, non-current liability. What is it?
So it is a non-current liability.
It is a non-current liability. What to do for this 8%?
You will deduct 8% from 36,000. Yeah.
What is this 8%?
The interest.
Okay. So this 8% is interest on debenture. So whenever you are doing the income statement, what will we do is every item you will take and you will try to see if there is anything
Okay.
else related to debentures.
Yes.
What is this?
It says the 8% debenture 2026 was issued on 1st April 2023.
Okay. So this was issued on 1st
1st April.
April 2023. What does
Yeah.
this mean?
It means it was issued before 2026.
Yeah, so what else? What
What
is this
else?
8%?
It's the interest.
Okay. So you will give interest on debentures?
Yes.
How much?
So 36,000 into 8%.
Will you give for the full year?
No,
By?
because it was issued at 1st April 2023.
So that means
What's the name?
whenever the date of issue is given, right?
Yeah.
That means interest is for some months,
Okay, yeah. For
not
some
3 months.
months. So okay. So it's so 1st April 2023 till July 2023. So April, May, June, July. Yeah, so 3 months.
Again count.
So April, May, June, July. 3 months, yeah.
Again count.
April, May, June, July. Oh, 4 months.
Hmm?
4 months.
So what will the interest be?
So 36,000 into 4 divided by 12.
Into 8% you will not do?
You will do 8%, of course.
Hmm.
Yeah. 36,000 into 4 divided by 12 into 8%.
So it is 960.
Yes.
Interest on debentures. Interest on debentures and preference dividend. This
Okay.
is what
So this is the finance cost.
interest on debentures. 960
Hmm.
is your finance cost. Can I go and write it?
Okay. Yeah.
Okay.
Yeah.
So you're clear with this interest on debentures now?
Yes.
This is done.
Yes.
Now what is there?
Now the next thing is, let me read. So the next thing is the opening and the closing inventory.
Okay. Opening and closing inventory will come where?
Opening and closing inventory will come in the cost of sales.
So what is the formula for cost of sales?
So for cost of sales, it will be opening inventory plus purchases minus closing inventory
Opening inventory
plus
plus
purchases
purchases minus closing inventory.
minus closing inventory. Yeah.
And this you will do in the place that is provided to you, that is your working note number 1.
Yeah.
Okay. So what is opening
Yes.
inventory?
So the our opening inventory is 36,800.
Purchases right now I don't know,
Yeah.
but I know my closing inventory, which is 43,190.
Yes.
Okay. So
Yes.
I'm done with this part also.
Yeah.
Yeah. Now other
Yes.
payments. What is
Other
other
payable.
payments?
Other payables will be, is it current liability?
Yeah, but it is outstanding expenses
Yeah.
and prepaid.
Received income.
Yeah. So this is outstanding expenses.
Yes.
What is the treatment for outstanding expenses?
So for outstanding expenses, the current year will be add
Hmm.
and the last year would be subtracted.
So outstanding expenses, current year add, last year subtracted. So this is
Subtract.
outstanding expenses of the last year.
Yes. So it's gonna be subtracted
Subtract. So you have
from
made
the
working
administrative
note number
expenses.
2 for which administrative expenses, right?
Yes.
And your working note number 3 is for what?
Distribution cost.
Distribution cost. So come on. 960 is outstanding of the last year. So you will subtract.
Yeah. Subtract.
Now come on. Other receivables.
Other receivables is for administrative expense.
Other
So
receivables
which is
is what?
pre-received income.
Other receivables is prepaid expenses.
Okay, yeah.
Hmm? And
Yes. Prepaid
outstanding
expense.
income.
Yeah, prepaid expense and outstanding income.
So this is prepaid expenses.
Yes.
This is prepaid of the current year.
Yeah.
And this is prepaid of the last year.
Yes.
So prepaid of the current year you will,
Minus.
and of the last year you will.
Add.
So I will do minus 160
Yeah. Plus 1820.
plus 1820.
Hmm.
Yeah,
Yes.
come on. Other receivables distribution costs.
For the distribution cost. So it's the same thing. So this one's gonna be minus.
Prepaid expense of the current year.
Yeah, so it's gonna be minus.
Okay. Now you think about this.
Okay.
Okay, and tell me what is the relationship between this. Until then, you can do your workings. I'll just give you something.
Yeah, yeah, okay. Is it a
Okay, whenever you have opening and closing trade payables,
yeah,
whenever you have opening and closing trade payables in an income statement or a club and society, trade payables or creditors, that means
yes.
is an indication that you have to find purchases.
Oh, okay.
Okay? So whenever you have opening and closing trade payables,
Yeah.
it is an indication that you have to find purchases. And how will you find purchases? CP
Oh,
minus O, CPO.
yeah.
So how will you find purchases? Purchases would be closing trade payables. Can you tell me the closing trade payables?
The closing trade payables. So the closing trade payable would be 25,250.
So closing is 25,250
250.
plus payment to suppliers
Yeah, payment to suppliers, 122050.
minus opening trade payables.
29,610. That which will give us the purchases.
Hmm. This is a hint that you have to find purchasers.
Oh, okay, okay.
So please do your markings accordingly, okay?
Yes, miss.
So how much is your purchases?
So wait, let me calculate. So 25250.
So this is coming up to 117,690.
117690. Yeah,
So 117,690. Are you
yeah,
with me?
yes.
Okay, fine. Now let's go ahead. Administrative expenses. Where will I put payments?
Yeah, payments.
Where will I put
In working number two, so 66,920.
okay, fine. Payments, distribution cost. Where will I put
Working number three, 551,730.
receipts from customers?
Hmm.
Do you have opening and closing trade receivables?
Opening and closing trade receivables? No.
No, you don't have opening and closing trade receivables. That means the money that you've received from your customers is your revenue.
Yeah.
Okay. So revenue, I will put 284, 200.
Yes.
Are you with me?
Yeah.
Let's go ahead.
So the cost of sales. Okay, the first adjustment. All goods are dispatched to customers immediately on receipt of payment.
That
What does
means,
that mean?
yeah, did properly analyze it.
What do you mean by all goods are dispatched to customers? Is there any all goods are
Just sent it to the customers. Dispatch to the customers means all goods are sent to the customers.
sent? Okay.
When are they sent to
Immediately.
the customers?
What?
When are the goods sent to the customers?
Because they paid for it.
Immediately on receipt of payment. That means
Yes.
as soon as you receive the payment, you dispatch the goods.
Yes.
What does this mean?
Which means like as soon as the customer paid, you dispatch the goods to the customers.
Means all the sales are cash sales.
Yes, all sales are cash sales.
So does this mean that all sales are cash sales?
Yes.
So it means all sales are cash sales. We
Yeah.
already dealt with this adjustment, right? Debentures.
Yeah.
You have charge for taxation,
Yeah.
10,700. Can I put it
Yes.
directly in the provision for tax?
Yes.
Yeah.
Yes.
Now read the second adjustment and tell me it is related.
Okay. Okay. So the second adjustment says inventory at 31st July 2023 included damaged items that had cost 36,000. One half of these items will be scrapped and have no value. The remaining items will be sold for 900 after repairs costing 420.
Now listen properly. I have
Okay.
closing inventory of 43,190.
Yes.
This has damage inventory.
Yes. So
That means
minus C3.
damage inventory is to be adjusted and a new value has to be given.
Okay. Yeah.
So I will minus the damage inventory. How much?
So 3,600.
So 43,190 minus 3,600 is the damage inventory. So I will get how
Yeah.
much?
We'll get 39,590.
This is normal inventory.
Yeah.
Now come on, value the damage inventory.
Okay.
3,600.
So yeah.
So half has to be scrapped.
Scrapped. Yeah.
No value.
Yeah. No value.
So what is half of 3,600?
The half is 1,800.
What is the remaining half?
So 3,600. Also
Remaining half is
1,800.
half.
Yeah.
Now this is a
1,800.
cost for it.
Yeah. Cost.
What is the NRV for it?
The NRV, the net book value.
Hmm.
So it's 1,800 plus
Estimated selling
39,500.
price,
Yeah. Estimated selling price minus.
cost to repair, cost to sell.
Yeah. Cost to sell.
So what is the cost to sell?
Cost to sell. Sold is 900. So yeah, 900 minus 420.
Okay. So
Yeah.
NRV is how much?
480.
480.
Yeah.
The valuation of this inventory would be 480. Cost or
Yeah.
NRV, whichever is lower.
Whichever is lower. So NRV.
So valuation would be 480.
Yeah.
So you removed the damage inventory And you will
Yes,
value the damage inventory at
480.
so what is the exact value of your closing inventory?
40,070.
Sorry.
40,070.
So when I'm doing my cost of closing inventory, here I will
Yeah,
minus what?
40,070.
So what is my cost of sales?
Okay, so your cost of sales would be 36,800 plus
36,800 plus 117.
117,690 minus 40,70.
So your cost of
You'll
sales is how much? 114.
114,420.
So I will put this in cost of sales.
Yes.
Can I have the gross profit?
Okay.
So
So
200 minus
128,420 minus 114,420. 169,780.
administrative expenses.
Okay. Administrative expenses. So 66,920 minus 960 minus 160 plus 1820. 67,620. Right?
Hmm. Distribution
And
costs.
distribution costs would be 51,730 minus 1490. 5240.
Profit from operations.
So 169,780 minus 67,620 minus 5240. 51,920.
Profit before tax.
So plus 960.
Minus,
52,880.
minus
Oh yeah, minus, sorry. 51,920.
51,920
Yeah,
minus 960.
minus 960. So
59,600.
50, yeah, 59,600 minus 10,700. 4260.
40,260. Okay.
Yeah,
Yes, we complete the income statement. We complete the statement of changes in equity. Now come
yes.
D.
Okay. Advise the directors whether or not they were correct to make a bonus issue of shares rather than making new issues of shares.
They had made bonus issue, right?
Yes, they had a bonus issue.
So when they did bonus issue, they used full of the share premium.
Yes.
Okay. And they use a
Mm.
bit of their additional retained earnings.
Yeah.
Were they correct to make a bonus issue rather than make a new issue?
Mm. So the advantages and
So
disadvantages.
if they are issuing bonus issue, what is the benefit?
The benefit of bonus issue.
Or what are the advantages and cons, pros and cons of bonus issue?
Okay. So for bonus issue, the
It will make
advantage would
use
be,
of securities premium.
yes, it would make user securities premium.
Existing shareholders will get happy
Yeah, existing shareholders will get happy.
and they will invest more.
Yeah, they will invest more.
Disadvantage,
You'll get no money because it's free.
no cash inflow.
Yeah, no cash, it's free.
So 3 points you write for bonus issue, fine.
Yeah.
Come on, now go for new issue.
Okay, for if you've made new issue,
You will
so
raise
the advance, yeah, you will raise finance. There will be cash involved.
you will dilute the ownership,
Yeah, dilute the ownership.
new shareholders coming in.
Yes.
Okay. But because you did bonus issue, you have very less retained earnings.
Yeah, very less retained earnings.
So advise whether they were correct to make bonus issue or no.
If the director's intention was to make more profit, so new issue would be the much better option.
More inflow.
Yeah,
However, the ownership would be diluted. You
yeah,
could
the ownership
further
would be
make right
diluted.
issues also if the shareholders are happy.
Yes,
So my advice is it's correct to do the bonus issue
yes,
because there is no dilution of ownership.
yeah, there's no dilution of ownership.
Shareholders are happy.
Yeah,
Securities premium will be used,
yes,
and then further right issue can be done.
yes,
So it is good to have the bonus issue. You have to advise
yes.
accordingly. So with
Okay,
this, I
yeah.
complete October-November 23, paper 22, question number 1, which is of limited company.